Hey everyone, welcome back to the channel. I want to take a moment to go over what I think is the elephant in the room that often is not addressed, not nearly enough in my opinion, in the real estate market within the US. The housing market, the rental market as well, since there are some serious underlying issues that need serious attention as well. Biggest of these issues is the current rate of mortgage forbearance in the US. For those of you who don't know what forbearance is, it's where your lender gives you the option to stop making payments for a while, and then you'll have to make up those payments at some point in the future, sometimes right at the end of the forbearance period, though that's kind of unlikely in certain cases, but that's the general premise. The lender stops taking payments, you don't have to make payments for a temporary period. Now, if you look down here, this is from aggregated data from many of the main mortgage lenders in the US for really residential properties, Fannie Mae, Freddie Mac, the FHA, Federal Housing Authority, and the VA, so Veterans Affairs. They do their own mortgage program as well, and there's some other smaller federal programs. What these programs really do is they buy up loans from banks that will make the loans, and then these agencies will buy them and hold them and package them into mortgage-backed securities and do whatever they want with them. That's kind of how the mortgage market works in the US, and that's generally how such incredibly low rates can be given on mortgages in the US. It's because they're basically subsidized. They're bought up by these government agencies mainly when it comes to the residential side. Commercial has a lot of subsidies too, in the sense that the Federal Reserve owns like 60% of mortgage-backed securities, if I'm not mistaken. Commercial mortgage-backed securities, that is. I actually just double-checked that going to the Federal Reserve Bank of New York's page, and right here it says that commercial mortgage-backed securities outstanding total around $750 billion on the Fed's balance sheet, so about 47% or half of the commercial mortgage-backed security market. But that's not the point of this video. However, that is a big issue to keep in mind as well. Going back to forbearance here, we could see that at the beginning of the pandemic, when the CARES Act was launched, many people took advantage of the forbearance option that was given in the CARES Act. Lenders had to allow, if they had one of these types of loans, they had to allow forbearance for some amount of time. And that meant that a lot of people took advantage of this. Some people needed it, others did not, and just were taking advantage of this opportunity to be mortgage-free for a couple months. And many people did come off of it, but as you can see, we peaked at around just under 5 million mortgages in forbearance among these programs, which definitely makes up the vast majority of mortgages out there. And you can see it's plateaued. It's slowly come down through the last year, but it's plateaued at around 3 million mortgages that still are in forbearance. Now that in itself might not seem like a problem to you. People don't have a mortgage to pay. They can spend money into the economy. They don't have to worry about losing their home. All that good stuff. Certainly valid considerations. But think about what's happening on the other side here. Now you have 3 million mortgages that aren't being paid. Now, some people will still pay their mortgage while in forbearance, but many people are not. I'll get to that in a second. So we have 3 million people who, we'll say half of them aren't paying their mortgage. So 1.5 million mortgages aren't being paid. That's a large revenue stream that is not going back to lenders who can then re-lend out more funds. That is not going into the pension funds that own many of the mortgage-backed securities. Lots of cash flow issues here. The mortgages themselves are not some sort of isolated entity. They are the backing for a large number of financial products out there. For better or for worse, that's how the system works. Mortgage-backed securities were a huge problem in the financial crisis in 2008, and they could be the very large problem if we are to see a pullback in real estate in the near future, because this is a lot of loans out there that aren't being cycled through the foreclosure process or aren't being pressured to sell or anything like that. So it's created this bottleneck in supply and a lot of uncertainty for lenders as well. Lenders don't know when the forbearance program will end, since a lot of this is government mandated. And Freddie Mac, one of those programs that buys up lots of loans, looks at the data from earlier on when this forbearance started and tried to figure out how many people actually paid their mortgage despite being in forbearance. You can see that a large chunk do, in fact about half do. So the 3 million is a little misleading, since it seems like about half, if not more than half, are actually paying their loans anyways and just took forbearance perhaps as some insurance, which, okay, that's certainly fine. If they're still paying their loans, it means they're probably doing okay. That's great. However, what about the other half? You have 40% who are missing their payments within the seventh month of forbearance. We're past that at this point. This doesn't go all the way to March 2021. But this is what's going on in the forbearance market. you have a lot of people who aren't paying their loan. They legally don't have to, but that doesn't negate the fact that them not paying has some impact. It has serious impact on the lending market, and it has serious impact on the real estate market as well, because they have zero pressure to sell if they don't have to make their mortgage payment when in fact they can't. I don't know how many of these people who miss their payments actually can't make their mortgage payment. There's certainly a portion of these who probably could make their payments but simply aren't, or maybe investing somewhere else or are spending recklessly. Who knows? It's hard to tell. This is very high-level aggregate data, but very important to keep an eye on. And you can actually see here that Black Knight says that 1.1 million forbearance plans are set to expire at the end of March, so more than half, which will be 12-month expirations. I don't know how many of these will actually be extended. Apparently, given the recent actions by the White House, many of these homeowners will be able to extend for another 3 months. But again, this is just kicking the can down the road. It has to end at some point. This can't go on forever. There's no such thing as a free lunch. Someone's going to bear the cost. And if we go back to normal, it would be back on borrowers. Certainly lenders would lose a lot as they get bad loans off the book. So I don't know what scale it's going to be at. I'm not saying this will be some 2008 collapse, but we certainly could see a pullback just because of this phenomena with loans coming off of forbearance and more supply entering the system again. And on the rental side, which is the other side of this elephant in the room in real estate, you have really huge mounting problems with evictions that maybe have been negated by the recent stimulus act, which provided tons of rental assistance. We'll see how it's actually spent once it's given to states and whatever programs are actually administering it. I haven't looked too closely into that. However, there still are calls to extend the federal eviction ban. We did have a federal court case that said that this CDC ban on evictions was unconstitutional. That's being appealed because that's how the U.S. system works. It's case, then appeal, and appeal, and appeal, and appeal, and so on until you finally get a final answer, or someone settles, or someone runs out of money. So this is the ban there, and people are calling for this to be extended since it's supposed to end on March 31st. I kind of doubt they're going to let that happen, since it's very easy for politicians to keep kicking the can down the road. I'm not saying this issue isn't very important and very terrible for many people, but simply extending this eviction ban doesn't make the problem any better. It just kicks it further down into the future and makes it bigger in all likelihood, unless there's some massive turnaround in the short term, which doesn't seem like it's going to happen. However, it is kind of hard to measure the actual magnitude of this problem, sort of like the mortgage forbearance problem as well, but the eviction problem is even harder to measure, partly because there's just so many rentals out there, even more than residential mortgages, but also it's very decentralized compared to mortgages, which with a lot of them flowing into the same entities like the FHA or Fannie Mae and Freddie Mac. They own a ton of mortgages, so it's easy to look at data there. Very hard with rentals since there's individual landlords. In fact, about half of all landlords are individuals, so unless you're surveying all of them, it's very hard to actually get a clear gauge on how many people are behind in rent. But Urban Institute put together some pretty decent data, but again, the range is just so wide as for how much back rent there actually is. Back rent being rent that's owed by tenants that has not been paid, so rent that people are behind on, essentially. This is a number that you do not want to be high. And you see that we have, according to the Fed, or the Federal Reserve Bank of Philadelphia, there's 12 reserve banks at the Fed, so this is one of them. They all do their own studies. But you can see they say it's about $8.4 billion in back rent, which compared to the $25 billion in rental assistance that was given in the recent stimulus package, that would make it seem like this problem's taken care of, and it's simply been transferred into inflation instead. But anyways, that theoretically would cover that. Others, like the National Council of State Housing Agencies, says that the problem's closer to, we'll just say, about $20 billion. And it depends on how many households there are as well, since all of them estimate that there are a couple $1,000s per household on average of renters who are having back rent. So people with back rent, their average back rent is anywhere from $1,700 all the way up to $6,000, according to these three estimates. And then we have Parrott and Zandy here, who I believe are authors on this site, urban.org. They say that the back rent problem is up to $53 billion, so twice the size of the National Council of State Housing Agencies and over 5 times as much as the Federal Reserve Bank of Philadelphia. It's hard to tell who's right. You can make cases for as to why each of these is right. One might be overestimating, or they all might be underestimating. It's hard to tell. But what is pretty certain is that this is a problem. There's a lot of people who otherwise would have been evicted but have not been evicted, and this sort of pipeline of evictions keeps building and building, and back rent keeps getting bigger and bigger. Someone's going to have to bear that cost. The problem right now is figuring out who's going to bear it. At the moment, in the short term, it looks like landlords are the ones bearing the cost, since they're not bringing in as much rental income. And if it's an individual landlord with, say, one house, and that tenant in it can't be evicted and isn't paying rent, they're out completely. They've lost 100% of their rental income. And if they're not on forbearance, they have even bigger problems, since they can't actually pay their loan if they're not bringing in that rental income. And then they might be forced to sell their property at a huge loss, because they don't really have another choice, and then someone else is inheriting that property with a tenant in it that they can't evict, so causing very weird disturbances in the market. But when evictions are allowed to happen again, I would expect a significant amount of rental supply to come back online as well, which would potentially push rents down as well, especially if there is a lack of renters who could pay maybe as exorbitant of rent, depending on the area and the type of building you're in, and also depends on where the economy's at when this crisis is sort of allowed to unfold, I guess is the best way to put it. This is there's going to be a day of reckoning here. I don't know when it is. It's probably largely going to depend on when eviction bans end, and every state seems to be extending them. Lots of cities have their own. This is not all through the federal government, through the CDC. Many states have their own more stringent standards for stopping evictions as well. So it's not as though once the CDC ban ends, all of a sudden all evictions will be allowed again. Many states have their own regulations too. And then when you combine this with forbearance, you just see the weird changes in supply that we've seen in the real estate market, and some of these factors will affect demand as well. Demand mainly through the ability for lenders to lend. If they know they won't be able to get payments from someone, if they're in forbearance, that might not be as huge of an issue right now, but still a bank that's not receiving as much cash flow from a loan, if it happens to hold any on its books and doesn't sell it to one of these agencies, that's a valid consideration to make. There's a lot of things that are pointing towards the negative with real estate from these issues. I don't know how large that impact's going to be, but I definitely think it is relevant to keep an eye on, since if you're trying to invest in this environment, you want to adjust your required returns as you see fit, because this is a risk factor to keep in mind. Forbearance crisis being unlocked, which would unlock supply and potentially push prices in real estate down, that's a risk to keep in mind, and it seems more and more likely, and it keeps mounting, or at least it's not getting any better, I should say. We still have that about 3 million mortgages in forbearance right now. And then on the eviction side, it's hard to measure exactly, but you can't imagine it getting much better every day. Granted, the federal government has thrown a bunch of money into circulation, which would potentially cause a lot more inflation in the foreseeable future, or definitely in the distant future once that money makes its way through the economy. That's something to keep in mind when you're investing in anything. But I definitely think it's very important to keep these things in mind wherever you stand on the issues, whether you think the policies are good or bad. If you're trying to actually make investment decisions for yourself, you should be looking at this sort of information when you can. What you make of it is totally up to you. It depends on your risk tolerance, depends on what you're actually trying to do with your strategy. There's no cookie cutter approach to this whole thing. That's pretty much all I've got for today. If you found this video informative, definitely like it, since that would help the channel out a lot. And if you like this sort of content about real estate and the markets and pretty much everything as it has to do with personal finance, then definitely subscribe, since I put out new videos every single week and wouldn't want you guys to miss out. But until next time, take care.